Hello and welcome to the Sunday Legion Live. This is where we break down the overall markets. We're going to go over some trade setups, some trade ideas, and then I'm going to break down the Legion members' ticker requests, and then maybe we'll get into some Q&A. Okay, so I hope you all had an amazing weekend. Bryce and I had a good weekend. We actually were in Hudson, Wisconsin, and we were visiting a waterfall. And Bryce actually made this. This was super cool. I thought it was funny. There's Taylor Swift and Travis Kelce, and then there's us at the waterfall. So I hope you all had an amazing weekend. There's a lot of volatility in the markets, and the weekends are a great time to just kind of like relax, step away from it all. And then Sunday is a great day to come back and analyze the overall market. Okay, so what we're going to be starting off with is the overall broad market. And this is where it pays to be a trader. This is where we got some volatility. We got some big moves. You know, just in 2 days, the market dropped from high to low, 4.6%. That's where it really pays to be a trader. So I want to analyze this on multiple time frames. We can take a look at the monthly time frame, up and away, right? And a little bit of what's called a high wave candle last month. That's just, a sign of indecision. We have a big upper wick. We have a tiny little lower wick. And today, or this month, I should say, we have a bit more of a bearish month starting off for August. And this kind of looks like an evening star reversal. And that's where you have a bullish candle, kind of like a doji candle usually. That's the star in the evening star candlestick pattern. And it is a bearish reversal pattern. And then we have the bigger red bar. And, this month is still developing. But if next month we close underneath the low of this month, technically that's a sell signal on the monthly. And we could see lower prices over time. If we take a look at the weekly time frame, this is actually what's called a 3 black crows formation. And this is also a bearish reversal pattern. What are the 3 black crows? Well, that's basically where we have a big bearish week, close near the low. Big bearish week, close near the low. Big bearish week, close near the low. If this week we close underneath last week's low, let's say, like 530 on SPY, close enough, then that would be a sell signal. The biggest risk of a 3 black crows pattern is that if you do sell, you're kind of selling in the hole. You're kind of selling after quite a bit of sell side pressure, and your stop loss has to be all the way above pretty much the all-time high. And so that's, could be potentially a lot of risk, 7 to 8%. Maybe you do get a bigger correction in the overall market, but we have to wait for that to potentially unfold. If I just mark up some pivots, you got this pivot. We're kind of like at support right now. The futures are down just a bit. So, I could take a look at the ES futures. And we're kind of, still at that kind of support area. But if we take a look back at the SPY, we got some support, 523. I was using some AI to help analyze the charts, and AI was saying 520 area is going to be a strong support area. So maybe this net of like 523 to 520 is going to be like a net of support. If we take a look back on the daily time frame, this is a breakaway gap. What do I mean by that? Well, we kind of like broke away from this structure on Friday. And so that's a bear sell signal. We did have a bit of a lower wick on Friday, so maybe we could see some sideways price action first. But time will tell on that one. But this is a breakaway gap, so maybe we could, test lower levels, maybe 510. Maybe SPY could test, 500. That wouldn't be out of the question. And when you do have a breakaway gap like that, it does create resistance and sell side supply if you come into this zone. So anywhere from like 536 to 543, that's going to be a tricky sell zone. There's going to be a lot of sell orders built up from trapped buyers. There's going to be short sellers that are waiting to come and attack the market there. So just be mindful of all of that. And I'll come back to the SPY frequently throughout this live stream. But for now, I just want to briefly move through the markets. IWM, pennant breakout into a false breakout. So right here, you've got this, nice symmetrical triangle down here, breakout. Now we got a pennant, highs, lower highs and higher lows. We pinch, we break out. Volume was good, but then we zipped back in. And once you start to zip back in, that tells you all the breakout buyers that bought up there got trapped, and then they have to sell into the lows. Sometimes this is called a specialist breakout or maybe like a jab, because they normally a pennant like this, you break out and then you've got the distance of this flagpole extended into the breakout. And so that's a wicked reversal right over there, especially when that candle broke bearish on Thursday after FOMC. It was interesting. When I was trading FOMC live with the Legion, volatility was low for quite a bit, 30, 40 minutes. Normally it's high right away. And then it started getting intense. I was like, okay, cool. So that was very interesting. I was also trading the futures that day of FOMC, but also today, traded MES longs. And just to briefly break this down, we gapped down on the futures, and normally you could set a sell setup underneath the low. I went with the dip buy, went with a buy right there, put a stop loss right underneath the low, and we got a nice little pump, and I just took the small profits. Nothing crazy, but we'll see if the futures can recover from here or not. So just a brief note on futures. IWM, if it starts to break Friday's low, it's got downside action back to the gap 203.62. If it breaks above Friday's high, maybe it could come up and test 215. That might be the less likely scenario, though, based on the way things are going. QQQ, a little bit more bearish. You kind of have this like topping formation over here, left shoulder, head, right shoulder. You got the neckline, a breakdown, a retest of the neckline, and then another breakdown. So NASDAQ futures probably forecast sideways to slightly lower over time. It could get intense too, depending on what happens to the VIX. So if VIX starts to spike more and more and more, that's going to be overall, bearish for the market, and that's going to intensify the selling. I was noting in the middle of Friday, VVIX, and VVIX is interesting because it's the volatility of the volatility index. So what does that really mean? Well, just think of this as like acceleration to speed or velocity. So VVIX is on the left. It's the rate of change of the VIX. And notice how VVIX wasn't doing shit for a while, and then it starts to break out. That kind of hinted towards more selling than normal. So keep an eye on the VVIX if you want to look at the rate of change of the VIX. Okay? So think of like derivatives, DYDX. It's the derivative of VIX. Okay? Next up, I want to break down semiconductors real quick. So last time that I was on YouTube, I was talking about how I had this SOXS position. And SOXS goes up when the semiconductors go down. And I actually had been wheeling SOXS for a while. I'd actually gotten assigned at 22, and I had to go through some drawdown, 22, and it came all the way down to 1773. I was like, oh, crap. Do I really want to be short semiconductors for that long? And yes, I did, because that trade eventually paid out quite a bit. That actually helped finance, or I guess pay for my Apple Watch, which was very, very nice. And SOXS continued to go. I actually sold it in the 26 range, in the middle of the week. So I thought I got a good exit, but semiconductors got absolutely destroyed. Just from Thursday into Friday, SOXS went up 41%. You can take a look at SMH. SMH got absolutely clapped, dropped 14% in 2 days. And that's just because there's just a mixed bag of terrible earnings from Intel. Look at that. Absolutely destroyed. Nutty. You got NVIDIA kind of pooping, not too badly. AMD reversed from its earnings harshly. And you just got other stocks like Micron down 8.68%. How did Qualcomm do? I'm sure it's down. QCOM. Yep, down 2.86%. How did AVGO do? AVGO down a little bit, but not too bad. We know that Nancy Pelosi bought leap call options on AVGO, and that was pretty interesting. So maybe that sets up. Last week I did sell a cash secured put on SOXL, and that did get a sign. So we'll see if I can sell maybe the 33 or the 34 call. It was interesting. The put premium on Thursday morning was only 0.05. And then by the end of the day, Friday, the put premium was at 6.0. So literally that put option paid 1,000x from Thursday into Friday. And so when you're selling cash secured puts, The kind of the worst case scenario is if volatility picks up from Thursday into Friday. I love it though when volatility expands because as traders, we can really capitalize off of it. Whether you're a futures trader, a day trader, there's just so much more opportunity. You know, I'm not gonna lie, it was pretty boring when the market's just grinding up every day. You just watch your investments go up. It's cool, it's fun. You know, I enjoy building wealth and creating more wealth. And, you know, the cash secured puts are generating weekly income, but there's no like big plays to be made. Now there's the opportunity for bigger plays if you're an experienced and seasoned trader. If you're not, that's totally cool. Like practice in the simulator, maybe practice your chart analysis a little bit more. There's always some way that you can get better without putting on a ton of risk. So you want to put on the amount of risk that you're comfortable with. Remember, accept the loss and the risk up front before the trade. Then you deserve the upside of the trade if it happens to play out. Okay, so that's basically the semiconductors. I'd expect maybe a tiny rebound, but semiconductors might fall out of favor for a bit. I wouldn't be surprised if SMH maybe came down to like 190 or so, and maybe it plays in like a wide range. I don't want to speculate too much on this. The RSI is almost oversold, but not quite oversold. We'll see maybe if there can be some divergences that build, but yeah, nothing too crazy that I see right now. So that is the semiconductors. I want to talk about Bitcoin real quick. Bitcoin looks bearish to me. Bitcoin gapping down 6.47%. Just saw that. So Bitcoin, it had two options from up here. It could either break out to all-time highs or sell. It chose to sell and revert back to the mean. So not a lot of support on Bitcoin really until like 50,000 or maybe even a little bit lower. So I wouldn't be surprised if Bitcoin got down to 45,000. I do think, for me, Bitcoin is a buy around 45K. And when I say something's a buy, I'm not telling you to buy. None of this is financial advice. I'm not telling you what you should or should not do. I'm just telling you what I'm looking at and what I might be doing. Might be. And again, like, it depends on how the market evolves. The market could be completely different Monday morning. It's unlikely that we just reverse the entire, futures market, but it's possible. But Bitcoin looking bearish, and that kind of leads me into some of my trade ideas for this upcoming week. The first one's going to be Riot. I'm bearish Riot. Ideally, I could get like a bounce up to like 979. And then on Riot, what I'd like to do is potentially buy like a put option into like later September, maybe Riot 9/13. Go over to Riot, September 13th. Maybe look at something like the 9 put. Grab a couple of those, however many you want to, and see if I can't ride Riot, down to maybe this 7 level. I wouldn't be surprised if Riot dropped 17 to 20%. It's kind of been my favorite crypto miner too short. Again, lower highs, you kind of can see like the peaks. Sellers step in, sellers step in, sellers step in, sellers step in. Now we've kind of got like this descending triangle type of guy. And if it breaks support, it likely can flush, especially if you get a breakdown on the RSI that can help confirm the speed and momentum of the drop. If you see a breakdown on balance volume, volume is helping confirm the drop. So that's a short setup if you want to maybe even protect a portfolio. Sometimes just having a few short positions can really pay off. A couple of weeks ago, I talked about the snow short. This is still in play, but it's a bit extended to the downside. I even drew this last time. Just if it bounces up to 133, short it. And I just covered on this down day. Nothing too crazy. I didn't hold for the consolidation and the bigger drop. And that's cool. There's an opportunity cost to hold the trade for a longer period of time, unless, of course, it's your main trade. So that's something to think about. So another short opportunity is potentially coin. Coin's been in this like big balance range, equal highs, equal lows right up here. And if coin really starts to break underneath 195, maybe underneath 200, you could potentially grab some coin puts, maybe see if it tests. I don't know if it could get as low as 150, but something like 170 is not out of the question for coin. And again, I don't know if that's a dip buy or not. That's up to you to decide, but sometimes even the range of the balance range can be a duplicated target. So that range is 41%. We can duplicate that and extend it to the breakdown point. I don't know if coin can get down to 125. I would probably be fully out of short positions at the 150 level. I'd probably even be out of the short positions after like the first day or two. I don't like to overstay my welcome on short positions unless I need the hedge. And it looks like the market might be breaking down. You know, it's attempting to test those lows. And if these lows get taken out, I don't know. I'm not going to try and speculate the futures market live right now. But if it does break that support, maybe it could flush. So just be careful. Watch out. I'm in a lot of cash right now and just some light long positions, some light short positions. And then I've got my long-term portfolio that has dropped in the past week. I'm totally cool with my long-term portfolio dropping. It's like, finally, I can actually buy some stocks for a good deal instead of just doing the lame dollar cost average. So that's something to consider. In terms of other trade ideas and trade setups, AZN is a long setup, a long candidate this week. So I gave some short setups, some crypto short setups. AZN is a long setup if it can break above 82. And again, the reason AZN is a long, it's been consolidating nicely. We've got earnings out of the way. You know, RSI is making higher lows. It could be putting in a bigger bearish divergence. I hope it can blow through that divergence and have the RSI break out upwards. We could take a look at maybe like a call option, August 16th, buy to open the 82 call. And a stop loss on that, you'd probably just would want to like maybe risk 50% of the option. Friday, a nice breakout, retest. Is this all-time highs? This is weekly highs and it is all-time highs. So all-time high breakout setups are some of my favorite setups because there's just no overhead resistance. And the only people that are trapped are short sellers. So that's what's really cool to think about when it comes to all-time high breakout setups. So AZN, I really like the long. The problem is that the broad market might drag that lower. So maybe something like a wide bullish weighted iron condor. If you're a super options nerd, you know what that is. But a bullish weighted iron condor for this week. That way you can kind of collect credit on both sides of the tape. Consumer staples and defensive stocks have been doing well. You can kind of consider XLV, the healthcare sector, a defensive sector. You know, we've got all-time highs and they are buying dips. It might be getting exhausted. And if the sell-off in the broad market tends to become stronger, correlations tend to sync up, meaning even defensive sectors would eventually get hit if the overall market starts to really sell and you start to see the VIX spike, you start to see the VVIX spike. So just be careful. But, you know, for now, they're in rotation. XLV, XLU, we discussed on the Victory Talk podcast saying 67 to 65 was a great buy zone for XLU. Did I get XLU? No, because it went as low as 67.60, but then made new daily highs. XLU was an interesting one. We talked about, what is it? Oh, I'm blanking on it. It'll come back to me. Duke over 100. This is a good one. This was the one from XLU. And this was posted long over 101. Boom. If you took that trade. Boom. I know some funds took this trade. Got a nice good 11% gain. Cool. So that's Duke Energy. Watch out for earnings though. But if this could come back to maybe like 109, if this could come back to 105, maybe Duke is setting up another long as a defensive stock. Yeah, XLV, healthcare is doing good. XLP, consumer staples, are doing very, very good. And again, just breaking out of this flag pattern, maybe consumer staples can start to come into rotation for now. So that brings me back to some of the relative strength long lists. You know, we got CPB. This is Campbell's. And again, this is starting to break out. If you wanted to, it's not exactly a stock that you trade too much. More so you just like buy shares and accumulate. But maybe something like the 50 strike call option for August 16th. You know, play it small and see if you can get a breakout towards the upside just because it's in rotation. And of course, we talked about AZN. So there'll be some other setups that I'll post later tonight and tomorrow morning for the Legion members. But right now I want to shift gears and break down Legion member ticker requests. Okay, so feel free to post your tickers right now. First up, I'm going to break down Vale, V-A-L-E. And full disclosure, I am wheeling Vale. Am I down? Yep, but I've collected quite a bit of premium on this. Like I've been selling the 11 calls, 1150 calls. But Vale, looking pretty bearish. It's breaking down to new lows. There's no super crazy RSI bullish divergences like it was right here. So here's a nice bullish divergence that resulted in a nice little bounce, just a tiny one. But Vale, I would let this get a bit more stretched before going long. I would consider maybe something like the 10 strike cash secured put and maybe limit something like 25 cents. That way your break even is 9.75. And again, Vale pays a nice dividend. You can take a look at some of the fundamentals from Morningstar. And again, Morningstar is not the end all be all. It's just like another indicator. But fair value estimate is $14.20. That represents $14.20. That represents a 37% return from here. Also, Vale pays a very large dividend, 12%. It might even be a dividend trap. So I would only, I wouldn't overstay my welcome on Vale. I would only take a small amount. And there's the ES futures just now breaking support. Look at that. Nice flush right there. Drop, H pattern, drop, and a flush. So look out below. I might even trade some futures later tonight. We'll see, but you could trade like MES short, throw your stop above like this pivot, above 53.50, and then see if that trade makes money into Monday because the markets are looking pretty bearish, pretty nasty. So watch out. Okay? And that'll carry over to most of the stocks that we've talked about now. All right, let's break down the next ticker request, Kron. So Kron, this is a Kronos group. This is falling with the broad market. It could have gone into rotation. Look at this range. It just broke down Thursday into Friday. So I would expect that this would probably just break down with the rest of the market. Earnings are on 8/8. Maybe if MJ comes back into rotation, it could be useful for the wheel. Another thing to consider is the earnings for this week. So let's take a quick look at earnings. So here's the earnings calendar for this week. Palantir's a great stock to trade options on. That's cool. Lucid's a good one. We've got Realty Income. That's kind of like just a dividend stock. Uber's going to be interesting. It's a good day trading stock, swing trading stock. Same with Celsius, a good day trading stock there. You got Caterpillar, a big one from the industrials. Fubo TV, I don't know how they're not bankrupt yet, but we'll find out. After close Tuesday, we got Super Microcomputer. That's SMCI. So that's going to have an effect on the semiconductors. We've got Rivian. Cool. Airbnb. DVN, Devon Energy. I have actually owned that stock in my Roth IRA. It's a good dividend monster. We'll see how it handles earnings and how the energy sector performs. XLE. We've got Upstart, we got Amgen, we got Shopify, we got Disney. Disney's going to be interesting Wednesday morning. We'll see how the Deadpool and Wolverine movie did. If you guys followed my Kalshi bet on Wolverine and Deadpool getting a Rotten Tomatoes score above 75, you made 100% profit. So let me know if you have any questions on event contracts and stuff like that. I'm not some expert when it comes to event contract betting, but I do like to occasionally do that sometimes if there's a high probability of profit, just kind of like what we do with trading. We got CVS, that's interesting. Sony is interesting. Robinhood, Hood. Maybe there's a cash secured put opportunity if Hood sells off after earnings. We got LLY, Eli Lilly. That stock's been getting clapped because it got overbought so fast. And we got Kronos Group. We talked about that. Novavax, Datadog, DDog, Plug, Power. Got some energy companies. We got SoundHound AI. Okay, I'm done. You know, we got Nikola. I'm surprised that's not bankrupt yet. So that's interesting. So yeah, I would stay away from trading stocks before earnings, but then after earnings, that might be interesting. Okay. For a day trade, swing trade, investment, you name it. Okay. So yeah, let's break down some more stocks, some more tickers. CELH, Celsius, breaking down new lows. We talked about this. Drop, bear flag, drop, bear flag, drop, bear flag, drop, bear flag, drop. That's been Celsius's story. You got a OBV confirming the downtrend. You got RSI pretty much at 0. It's at 24. Maybe it rebounds into earnings. If Celsius drops after earnings, that could set up a fade trade opportunity. So drop, 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 fade trade. You can play the potential day trade bullish reversal. So that's an idea. So fade trade opportunity for Celsius. Okay. Let's check out XLE. XLE, a big reversal. So I noted that XLE probably stays within a channel for a while, and it has stayed within a channel. Now it's just breaking that channel to the downside on an increase in volume. On balance, volume looks okay. RSI looks bearish. Volume looks bearish. Chart looks neutral. It's not bearish. It's not the best, though. It's more just of a defensive sector. I wouldn't be surprised if XLE just went sideways to slightly lower. And I do have a bit of a head start by looking at the futures right now. So that is XLE, the energy sector. Oil, we can check out USO. I'm going to break down Ford/CL futures. And again, Ford/CL is looking bearish. It's looking like it might want to break down. And when oil drops, you guys, that is recessionary. So be careful. The yield curve has been inverted for a long period of time, and it's a very accurate recession indicator. It doesn't mean we're guaranteed to be in a recession or that the bull market is dead. It is just something to take seriously. So in a recession, what you really want to do is cash is king. Save up cash. Make sure you have a good job security. Make sure you have maybe a side hustle or two. You know, find out like what's your favorite way to make money, or what are ways that you make money that you don't mind. Obviously, it can be in the stock market, but sometimes the stock market can change its season, and your trading system may perform better or worse with that new season. So just always having, it is an idea to diversify your income sources versus when you're not in a recession. I think it pays to really go all in, whether it be a business, whether it be in your career or your job, really focus on one thing. That's just a tangent. I don't know if that advice pertains to everybody, but oil looking bearish. It is recessionary. We do have a pennant though. So we've got, high, low, lower high, higher low, lower high. Are we going to make a lower low? At the beginning of the year, I was bullish oil, and I made that video how I'm trading the oil market, and that did pretty well. I said the wheel strategy is good, leap call options, the wheel paid, took off the leap call options up there. I did try one more oil buy, and I did have to stop out of that. That's totally cool. Now I'm just leaving oil alone for now, but it does look more bearish than it is bullish on multiple time frames for oil. The next part just becomes finding an entry or just maybe skip it, maybe just watch it. Okay. Let's check out AI now. This is another ticker request. This is probably going to get hurt from the IWM dropping. On balance volume looks neutral. RSI confirming the bearishness. You kind of got a head and shoulders pattern on the RSI, just showing a loss of momentum. Again, forecast sideways to slightly lower as of right now. And it tried to fill the gap, didn't fill the gap. Not a long or a short. I would leave it alone. Maybe you could wheel it and squeeze some cash out of it. I am curious. Okay, nothing too crazy over there. Let me know if you have any more questions on AI, Jonathan. All right, Kylie, good to see you. TTD. TTD was a great put trade last week. Drop, bear flag, drop. Short setup underneath 89. Boom, that paid. 7.56% drop. Buy a put. Do you want to buy a put? I mean, you have earnings this week. So TTD trade desk earnings, 8/8/24. I would probably be leaning bearish. You can take a look at the Morningstar report. Again, not the end all be all, but the fair value estimate for TTD, the trade desk, is $52 a share. That does represent significant downside. That's 37% downside. What you could do is, if you're willing to hold their earnings, which I don't condone, I don't recommend, anything can happen for earnings. That being said, if you're going to hold through earnings, you could go with maybe a leap put option on TTD. Maybe cover yourself through the election. There's probably going to be some volatility, some chaos through the election time period. And maybe go out to maybe like December. I know it's not a leap put option, but you get the idea. Maybe buy the 70 and sell the 60. Vertical, buy 70, sell the 60. You could take a look at that and you could see, the max profit is $737. Max loss is only $263. And that can be a nice portfolio hedge, but you got to be willing to risk that entire $263 through the earnings. But you'd be protected until December 20th. And your insurance can pay out $737. So that's pretty cool. TTD. Put spread, that's how I'd play that. Otherwise, nothing really to be done. Maybe you can day trade it after earnings. Okay. TSLL, I'm going to break down Tesla. Good to see you, Kay. Tesla was a short setup underneath 215 last week. It never triggered. It did bump up to resistance 231, and I did day trade that. That was a nice little day trade win. It did reject well. And then it came back up, retest, and there's kind of that whipsaw in the market from the FOMC. They got everybody bullish, and then they rug pulled it. So the rug pull is kind of like delayed on the SPY and the QQQ. Literally Wednesday afternoon, everybody was saying I expect all-time highs or more upside, and they rugged it hard. They didn't even want to drop it just a little. They wanted to drop it a lot. That's a decent amount. And it makes sense, that as in like, it's reasonable for markets to drop hard if they've been going up for such a long period of time without any big corrections. Here's a correction, 6.6%, tiny little correction, 0.5%, 1%, and then just nonstop bullish activity. But from the highs now, market's down 6.36%. That's nothing. So looking at Tesla, I'd be leaning sideways to slightly lower, maybe a test 196 this week. Maybe you could get a short-term dip buy, though, at 196 area. Take a look at the volume and the price action. And if it's selling hard into that area, maybe give it a little bit more room. And yeah, TSLL is a double-levered long version of Tesla. We gave that kind of bearish outlook. 869 was kind of the area. Maybe if Tesla gets really oversold Monday into Tuesday, you could do something like sell the 8 put or sell the 7.5 put and maybe throw on some size right there. And then if you get assigned, cool. If you don't get assigned, cool. You get your buying power back. So 750 TSLL cash secured put potentially in play. And that would put it back into this consolidation range over here. And that would be Tesla getting back to like 180. Do you think it can get back to 180 in 1 week? It could. That'd be a 10% drop. That's not out of the question. It's unlikely that it closes underneath 180 this week. You can actually go to the options chain, look at the 180 strike put. You can look at the delta, and the delta on that is 0.07. Basically, that just means there's a 7% chance that Tesla closes underneath 180 this week. That means there's a 93% chance that Tesla does not close underneath 180 this week. So there's a 93% chance that Tesla closes above 180 this week. So that just can kind of help you select strike prices, and it all depends on your goals too. Like, do you want to hold Tesla for a longer period of time, or do you really want it to wash out the buyers that chased it at 270 after an extended run up? If you're buying a stock that's up 50%, that's cool. The trend is up. It's just where you're going to place your stop. So maybe you take a tight stop and then the trend reverses. Okay, so that's my thoughts on Tesla. Let me know if you have any other questions on Tesla. I'm happy to elaborate for you. CMG is up next. So this is Chipotle. Yum, yum, yum. You know, stock getting a little bit of a rebound after earnings. You know, it had a decent buy the rumor, sell the split type of news. Chipotle dropping 28% from its highs. That's a decent drop. After earnings, you get a doji candle, some indecision. Whenever you have a big downtrend and then you get a doji candle, that signifies a halt in the trend. And it doesn't mean that it's going to reverse. It just means the selling has stopped for now. And then if you start to break that doji candle to the upside, that is a bullish reversal. The next day is bearish, but kind of held support, indecision, and then a small little breakup, giving an 8% rally. This, as long as Friday's low holds on Chipotle, it does have a little bit of relative strength because it's already gotten destroyed. I'd expect maybe Chipotle does go sideways to slightly higher to test maybe 56.30 if this low can hold from Friday. If you take a look at Morningstar, let's see what they grade Chipotle as. And again, it's not the end all be all. It's just another data point. That's all. So let's see if we can pull this up. There we go. Fair value, Morningstar gives Chipotle as $43 a share. So is it the best buy? No. Is it a short? No, I don't think so either. I think we can wait for something else because it does have 16% or more downside still in the value of the stock. Okay, so that is CMG, Chipotle. Mara is up next. So Mara is going to be gapping down with Bitcoin. What I'd let Mara do is sell for a few days, and maybe Wednesday sets up a cash secured put opportunity. But for now, Mara's looking pretty bearish. In fact, you could almost short Mara at the beginning of the week, maybe even Riot. I'm not going to take that short, but it's just an idea for now. But maybe something like the 14 strike cash secured put could be in order. You know, there's only an 8% chance that it closes underneath 14. And even if you get assigned, you know, you can always wheel it back up. So that is Mara, cash secured put 14, but let it sell first. It's looking bearish, especially with Bitcoin selling off right now and increasing the sell-off as we speak. Okay. Next up is Hood. Hoods, we got that earnings report. Hood, what's the fair value of Hood? I forget. Either way, some analysts say, you know, Hood's got, you know, room up to 30. Some say Hood is overvalued and should come down to like 11. We'll see. Again, Hood sets up a cash secured put opportunity if it sells into the earnings and then drops after the earnings. Other than that, though, I'd leave it alone. Okay. But Hood, again, kind of like a specialist breakout, breaks out on a minor increase in volume, gets a doji candle. That doji, if I zoom in real quick, right here. This doji signified a halt in the trend and then price reversed. And that's that evening star type of move. Up, up, up. Doji. Okay, which way are we going to break? It chose bear after that doji. So I would just leave that alone until after the earnings report. Yep. NVIDIA. Yeah, I kind of covered it with the semis. It's probably going to gap down. We'll see, though. Support is 96.39. And during this entire time up here, 120 to 140, I was saying, let's wait. Let's wait for 96. Now it's coming into 96. Maybe it needs to go a bit lower, though. Wash out a few more buyers. Time will tell on that one for NVIDIA. Okay? But NVIDIA, well, I think its fair value is like, what, 104, 106? It depends on the analyst that you talk to as well. I would wait. Let the dust clear. If there is a deeper recession, you can probably just wait like a good year and then buy stocks after a year. That's arbitrary, though, and there's a lot more factors at play. But that's just a simple heuristic or simple mental framework for NVIDIA. But NVIDIA could just chop, too, you know. Don't forget that sideways is a way, especially in the stock market. Okay? So that is NVDA. Let's check out GDX. These are the gold miners. Again, from this breakout, 35.50, it's been a good move. I'm flat GDX. I've been called away on my shares, so I don't have a position on this. I do have a little bit of GDX in my Roth IRA, I guess. Let's break down gold. So on Friday, I took profits on GLD Leap call option, Leap call debit spread. And that's just because we held in the morning. And then once we started to break support, I was like, okay, I'm just going to exit out of that trade. Not really worth it. We can take a look at gold futures. And the miners are going to be, gold futures are up about half of a percent. I am still wheeling GOLD. This has been good, actually. Average cost should be around like 1780. I'll have to double check the math, but GDX has been performing well, and it's a big holding in GDX, GOLD that is. Newmont Mining is also in there. So that's something to consider. I'd just be neutral, GDX and gold. I'm not bullish, and the reason is because gold is still moderately correlated with the market. Let's see if Siri can answer this. What is the correlation coefficient between GLD and SPY? All right. Okay, never mind. It is 0.06, so it is pretty uncorrelated with the market. Never mind. I thought it was a bit more, like 0.3. But yeah, I'd just be neutral. I wouldn't short it. I wouldn't buy it. There'll be a setup on gold coming in the future. I do think gold does continue to make all-time highs over time. I think this monthly breakout does stick. It could even retest, though. Like if GLD came back to 193, that's a dip buy for me. Again, not advice or anything, not financial advice. I'm looking at a dip buy on GLD on a retest of the old all-time highs. Okay, on the monthly time frame, that is. So nothing too much there. Just kind of let it be. Let it be. All right, so that is gold. Silver is going to be very similar. Silver I got called away on. I'm kind of happy to be called away on it. It's been a nice little cash flow machine. Nothing too crazy. If silver SLV ETF breaks above like 29, that looks good. You can take a look at SI silver futures. We broke out of this kind of pennant. The volume wasn't good. It got a nice, little tiny move up, 5.5%, but then reversed hard underneath the support. So SI futures 32 might be a breakout, and obviously the daily highs 32.75. Silver futures are decently volatile, and they move fast when you're trading futures. That's for sure. Yep. So yeah, let's check out URA, uranium. Uranium getting destroyed. Once uranium kind of broke this balance range, that was kind of lights out. And again, you kind of have like a pseudo head and shoulders. It's not exactly head and shoulders. It's kind of just a topping formation. And I'm just drawing on my chart. Don't mind me. But once you really start to break that range to the downside, you get the retest, now getting clobbered, I would let uranium get really oversold, the global uranium ETF. Maybe it can come down into demand near like 22.65. Maybe. Let this one sell a lot harder, and maybe the 22.50 cash secured put could come into play. Okay? So that's on uranium. I would leave that be. Don't touch it. Unless you want to. You can touch it if you want to. All right. Next up is MSTR. I'd be bearish MSTR, just like Coin, just like Riot. Bearish. Until MSTR comes above 1827, I'd be leaning bearish for now. It has held up decently well. It's got a good run. I like Michael Saylor. I like what he says. I like how he talks. I think he's a smart guy. That doesn't mean his stock can't drop, though. For now. Next up is MO. Altria. This has been a good stock in the IRA, the Roth. I don't think I have too much. I got to double check. Gosh, only 2 shares. Never mind. So nothing too crazy. It's basically nothing. But yeah, I would leave that alone. It's a dollar cost average, only if MO could come down to like 44. That's kind of an area of value. But on balance volume's looking good. RSI is just fine. You know, it's overbought short term, but volume a little bit more bullish than bearish. You got bull flag breakouts. You got volume breakouts. Yeah, I like MO. It's part of that theme of the defensive stocks. The defensive sector is in rotation right now. So just be careful. Ivan, BITO, I broke down Bitcoin. I'd be bearish. Bearish in the short term on this. And it's going to be gapping down quite a bit. 7.2%, if not more. It's a good way to cash flow Bitcoin, but yeah. I wouldn't be surprised to see this down at like 1650 in the near future for now. All right. We got a few other questions and then we're going to wrap it up. Okay. We're kind of at that 30 to 45 minute mark. So I'll go for at most another 10 minutes. So spam your questions right now. All right. Okay. Hey, Greg, when you send a cash secured puts alerts on Mars, the goal of these trades to let it expire worthless or keep the premium, or is the goal to get paid to buy the stock? It depends. And I'll let you know in the Discord what my goal is with the trade. I'm cool with being assigned. So I'm always cool with being assigned. I wouldn't sell a cash secured put if I wasn't cool with being assigned. I would skip the trade. Ideally, yeah, you don't get assigned. You just keep the cash flow. But yeah, I'm cool with being assigned. Ideally, you don't. You accept the risk up front, and then you're cool with it. But yeah, Mara was a good cash secured put opportunity on Friday. That was just free cash. First thing in the morning, boom, sell the cash secured put at like 17.27. And then all day, it just stayed above 17. It almost got assigned. It was at 17.07, but then it closed above that level. So you just keep the cash. And that's good cash, 17 cents of credit for a per cash secured put to agree to buy the 17 strike or agree to buy 100 shares at 17. And that's just great cash flow right away. A nice 1% win on a Friday. Super simple. Next question. If you let a credit spread expire worthless, when do you get your buying power back? You get your buying power back on Saturday. It may depend on the broker. I know sometimes Webull might give back your buying power on Monday. But on Thinkorswim, on Robinhood, I get my buying power back on Saturday. I don't know with Interactive Brokers. With TradeStation, I get my buying power back on Saturday. So I've got quite a few brokers, and that's what I've experienced with those brokers. So yeah, if you let the option expire worthless, your buying power should come back the next day. Yep. And that goes for daily expirations as well. I've been crushing it on SPX iron condors lately. They've been, I may have gotten this lucky at some points, but I was like right within the range right here. I needed it within that range. I didn't do it on Friday, but I know Jonathan did and crushed it. This day, Iron Condor was pretty good. I think this day, Iron Condor just barely stayed alive. There's one Iron Condor. Yeah, it's just crazy. So your buying power will come back the next day. All right. TZA, cash secured put. TZA, this is the triple levered inverse version of the IWM. If I were to do a cash secured put, the support on TZA is going to be around 15. So maybe sell the 15 strike cash secured put on TZA. Yeah, that's a great idea. In fact, that might be coming in hot first thing in the morning. The problem is that the markets are gapping down, so I might not get as much premium for this. But if I could get 25 cents for the 15 strike cash secured put, that's great. That's almost 2%. If I get 30 cents, that's 2%. Yeah, same with SQQQ, cash secured put. I like this because you can really leg into it if you want to. But maybe selling like the 9 strike cash secured put. Yeah, collect 13 cents, 14 cents. I would love it if the market could recover by the open, but it looks like they might want to trap the buyers for now. So look out below, okay? For now. Maybe it could start to get going, but It's just retesting the breakdown point, and it is showing some resistance. So no recovery until ES futures get back above 53.50. And even then, it's still got a lot of work to do. So, hey, you guys, I'm going to conclude the Sunday Legion Live. It's an honor to work with you guys. I'm going to get this up to YouTube. Feel free to comment and say hello. All right? Much love, much respect. Peace out.